Hello and welcome to another OFP video. My name is Tom and today I'm going to be running through the prohibited strategies at OFP. So this is all the strategies that come with trading that some people use in order to try and guarantee profits, etc., which OFP does not allow because it tends not to show proper risk management or properly trading or learning how to trade as you should. So the list of prohibited strategies are as follows. You have arbitrage, opposite account trading, hedging, EAs, tick trading, news straddling, and the martingale strategy. So first off, we have arbitrage. So this is not allowed by any means at OFP, and this includes things such as latency arbitrage, reverse or long-short arbitrage. So what it is that arbitrage is the exploitation of an advantage that you may hold in order to try and get risk-free profit. So this could be in pricing differences, could be in latency if you have a different system, etc., which means that you are able to benefit compared to others and make risk-free profits. And this just isn't allowed for three main reasons. So firstly, if you're trading in reality, there could be potential barriers to this. So slippage, for example, which could make arbitrage less rewarding or maybe not even possible in certain situations. And because we're trying to replicate real markets and proper trading, we won't allow it either. Arbitrage can be performed at the expense of other traders, and this is something that morally OFP doesn't do. If you're able to have an advantage over someone else just because of the system you're using, then we don't feel that that's particularly fair, and that's what we're trying to uphold throughout OFP's products and services. And finally, arbitrage can sometimes lead or involve high-frequency trading, and this is often in breach of OFP's terms and conditions. So secondly, we have opposite account trading. So as it kind of sounds, this occurs when someone uses two different accounts and they will enter opposing trades on those opposite accounts. They will use stop losses and take profits in such a way that they try and minimize the chances of making a loss and maximize the chances of making profits. Because this really isn't a proper method of doing risk management, you're effectively just preventing yourself from making losses one way or the other. We class it as a bit devious, and this is something that OFP won't allow and will see traders banned if found doing it. Then we have hedging. So this is where a trader will buy and sell at the same time, at the same price, in order to make profit either way and limit the downside risk. So again, similar to opposite account trading. OFP also flags any accounts where on the same currency or same metal or same index, whatever it is you're trading, if you have an open and a open buy and sell trade, this will also be flagged for review. So this is again down to the fact that there is very little shown risk management. You're simply trying to hedge your bets either way, and this isn't what we try to recommend and promote at OFP. And again, because sometimes it's not replicable and doesn't necessarily show any skill, we try to prevent people from doing it. Then we have expert advisors. So these are pre-programmed systems that are instructed on when to sell, when to buy, etc. And again, because they are not properly trading, the trader isn't necessarily showing any skill, they're simply using EAs instead. We don't promote this and we don't allow it under our terms and conditions. And again, some EAs will execute trades very quickly, which is not permitted. And again, if you're found using an EA, your account is terminated immediately, but you are of course allowed to purchase another account and trade as OFP would without an expert advisor. We then have tick trading. So this is effectively when someone uses high frequency trading techniques to test demo settings, often using programmed experts, opening trades rapidly. But again, because this cannot be replicated in real time, in necessarily real market conditions, due to such things as latency and liquidity depth, we don't promote this, again, because of the fact that it can't be replicated in reality. Then we have news straddling. So this doesn't mean having a trade open during the news, which OFP does allow. What it means is that you take two different positions prior to a large news announcement. So of course, news announcements can, depending on the type and who's making the announcement, impact certain forex pairs, metals, etc. in different ways and can have a large impact as being predicted. So some people will open different positions or opposing positions, and then once the movement is known, they'll close out the opposite position, again minimizing the downside and maximizing the upside, but without showing proper risk management. And as I said, we do at OFP allow people to have trades open during the news, not just targeting the news and, as the title would suggest, straddling the news. And yes, if you do this, then you can be suspended and your account terminated. And finally, we have the martingale strategy. So this is a strategy employed effectively using statistics, where people expect mean reversion, where at some point a losing position must turn into a winning position. And so as a losing position begins to unfold, the trader will increase the lot sizes that they place on it. So they'll increase the size of the losing position in the hope that when it does eventually revert and turn the other way, i.e. go from a losing to a winning position, that the magnitude of the win will either counteract all the losses, so revert back to a no loss position, or even go into a winning position. And again, because this isn't really risk management, you're gambling, it's something we don't promote. And furthermore, what it can entail, because it's all theory, what you can see is that you could effectively lead to using up your whole account simply as it goes lower and lower and lower, simply hoping that at some point it will revert back to a positive. But again, because this can't be guaranteed, because there's no way to necessarily prove the point at which it's going to increase or benefit you, it's something we don't promote and we don't allow at OFP. So that is all the strategies that OFP has prohibited for traders using. Hopefully this has been somewhat enlightening, and hopefully you don't do any of these, as of course your account can be terminated. Please feel free to go to ofpfunding.com, where we have all the terms and conditions. We explain more about the prohibited strategies, what happens if you are found to be using these strategies, etc. And if of course you have any questions or queries, feel free to email our support team or go on to the Discord community, where one of our team will be more than happy to help. Thank you very much.